Guys, this is the most important video I'm going to make on what's happening in the market and an update. Let's not waste any time. Let's jump into my portfolio right now. I'm going to be using my screen and I want to go over my performance. In the past 1 month, I'm up 2%. In the past 1 week, it's been freaking tough. Down 4.96%. Okay, I want to go through some of my positions and tell you what you need to do right now, what you have to do. Past month, I'm up 202,000. Years to date, I've made $369,000. People are talking about a crash. I'm sorry for the clickbait title, but I need you to watch the video and click on the video, and that's how YouTube works. But the information that I actually deliver in the video is designed to give you results, and I speak truth on what I believe. My video yesterday, a lot of people have said that I've switched 180. I have not switched 180, and I still absolutely love Tesla, where I have 1,000 shares, Palantir, where I have 2,800 shares, American Airlines, Chipotle, Kraft Heinz, Snap, Nike, SoFi. Things are tough. However, I'm holding. I'm a bull. Nothing has changed. I simply said in the last video, be more cautious. And in this video, I want to give you an update, and I have more research, and I spent a lot of time on the research. So let's discuss what you need to do in this market and how to hedge, because that's the message I'm trying to convey. I still believe in SoFi. Otherwise, I wouldn't be holding 8,000 shares here. The stock went down to $14 per share. I have $112,000. It makes up just under 3% of my portfolio. And I'm down 7K on SoFi. However, what's been really helpful in my portfolio, Apple, Walmart, Amazon, PayPal, these are really good stocks. And I'm a little bit shocked because my portfolio is actually doing pretty good compared to the S&P 500. So my performance is 2.2% in the past month. Some of the comments said I'm not going to be showing my portfolio, and for some reason I've gotten scared. Guys, I'm not scared at all. The stock market doesn't make me scared. I've been at this game for 11 years. And my job here is to educate you on making better decisions so you can make money. And if you're down right now, it's because your position sizing and asset allocation is likely not the best. Let me help you achieve better results using the research that I've made for this video. I also still respect your time as always, so here's a summary to what I'm going to cover. I'm holding many high growth companies but selling covered calls to generate income on positions like SoFi, Tesla, and Nvidia because they have seemed to have a short-term peak, and due to the Bollinger Band and RSI, where the stocks have reached a shorter term peak, again, a shorter term peak can be several weeks to maybe a month, but I think in 2025, we still have a bull market. I'm trying to generate as much income as possible by selling covered calls, not by selling my positions or getting out of that position. The stock market is the only place where people panic about discounts, and I'm going to talk about that more in this video. And I'm going to explain this by using real numbers and data from our economy. The third thing I want to cover is I want to explain to you how recent performance is just a correction. I mean, this stuff happens multiple times a year. If you think about how many times the stock market pulls back, it happens 3, 4, 5 times a year. It's totally normal. It's a healthy part of the market. So despite, the thumbnail and the title, which everyone does on YouTube, I want to be honest. I'm still a bull. I just think we have a short-term correction, okay? Not a crash. Crash is when the stock market falls 20%, correction is 10%. All right, and then I want to wrap up with what Apple did, because Apple, some big stuff. And I know Apple's not an exciting stock, but the implications that it has for the rest of the market are absolutely wild. So let's dive in. So AI has to dominate in 2025. The reason why we see a pullback right now in Palantir and some other stocks that are not performing as well, like AMD, is because investors have really high expectations. We have a record amount of retail investors in the market right now, and the reality is that we have a strong market, but when expectations are different from even the strong market, that's where investors may get disappointed and sell stocks. We saw that with Walmart, okay? So Walmart specifically had an amazing quarter. The quarter was so good, the ex-CEO himself said this is one of the best quarters I've seen, yet the stock plummeted. And I have a huge position, as I showed you guys in the beginning of the video on my phone. The stock went from like 104 down to like 92. Right? What's going on is that we're having a repricing, okay? I'm going to show you the craziest clip from Tom Lee in just a moment. But I want to reaffirm that all the companies that I've covered, Palantir, SoFi, Tesla, Nvidia, Google, and Apple, have strong competitive advantages. And I personally think these companies are the golden goose, guys. They're the golden goose. They're going to keep laying golden eggs. Just because you see a correction doesn't mean anything, right? I've made videos for the past years. My opinion is I'm a perma bull. My video yesterday looked for some reason confused a lot of you guys that I switched to the bear camp. Not at all. I just showed you I have $4.2 million. My portfolio is up for the past month. In fact, I'm up for 1 month, 3 months, 6 months, 1 year. I'm doing great. And my community on Discord is doing great. I think there's sometimes confusion here on YouTube because there's a lot of delay in the videos that I'm making here. But the truth is, all these high quality companies that I'm covering are still going to absolutely crush in 2025, okay? No short-term pain really matters. And to me, this actually looks like a discount. So look, I want to discuss the economy and the consumer because small businesses and consumers, they make up the bulk of the economy. You got to follow what's going on in the economy. Why do stocks go up? Because they make money. How do they make money? From consumers and small businesses, okay? Here's what I saw. Retail sales missed pretty badly. And that's why a lot of stocks actually fell down. It's because the consumer looks really weak. However, I've done a lot of research. California showed strong spending, but the rest of the country was colder than usual, so less people shopped and spent money at retail stores. Walmart actually had very strong numbers, but investors worried about their forward guidance. They beat on earnings, but the stock dipped because expectations were high and their outlook wasn't as strong as investors had hoped. This is exactly what I mean when I say that market is an expectations game. If companies don't guide higher or deliver continuous growth, stocks get absolutely punished. But they get punished like the little kid. Like if you have a son or daughter, you punish them, you put them in the corner for like 2 minutes, you're like, you're so cute, I love you, get out of the corner. Let's go back to living life, okay? The punishment is 2 minutes, literally for kids. And I don't know, because my parents didn't punish me like that. But you know what I'm saying? The punishment is very short term. So, you know, a lot of people are panicking. My comment section turned into like some crazy toxic stuff. But guys, I've made everyone hundreds of probably millions of dollars because we have a big community here and we get a lot of views. And that's because I've been on point with what I'm saying on Palantir. We picked it up at $22 per share. We picked up Walmart for 50 bucks. We picked up SoFi for like 11. So many of you thought that I jumped ship from being a bull, but that's furthest from the truth. In fact, I see that the weak performance is actually a bullish signal. Tom Lee also said that he sees this as a positive for stocks. So let's watch a quick clip because that's exactly what Tom Lee said is exactly how I actually think. This is actually the truth how I think. So this quick clip, let's check it out and then I'm going to help you digest this clip and then I'm going to help you make informed decisions in this market right now.
What really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher, too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Well, these inflation expectation surveys matter to the Fed because they're concerned about whether or not consumers are actually raising their inflation expectations, and that would, in fact, be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
Tom Lee said that investors are skeptical because the market keeps making highs. I would say the market is adaptively smart. It's smart to be skeptical because when the market keeps going high after high after high, of course you have a correction. Again, that's healthy. That's a good part of investing. If stocks only went up and I only said, always buy, never be cautious, and just buy call options, you would get rich, but when there's a correction, you would lose a lot of money. Instead, what I do is I use covered calls to generate income when the stock market has a correction. I hold every single stock, not a single penny I have sold, but I'm doing covered calls. And Tom Lee said that basically inflation surveys matter, but they are polluted, okay? And I've been saying this about the CPI actually. So the numbers are kind of manipulated, is what Tom Lee said, by politics. No surprise, politics is business. Government is just business, so they're just making money, all right? But what he said is very interesting because Tom Lee himself says that inflation is kind of a lie. And I've been saying this about the CPI. So I believe personally that the CPI is a lot higher. It's a lot higher than what they say. They say 3%. It's not 3%. Have you looked at real estate prices? Have you looked at, education? Have you looked at healthcare? It's definitely not 3%. Maybe it's 3% for low demand goods, like low demand things. But if you take a look at what humans actually need, healthcare, education, shelter, it's not 3% inflation. That's complete nonsense joke, right? I think inflation is really high, but this doesn't matter for Palantir because Palantir is actually going to benefit from higher inflation. Okay, Palantir doesn't care. They're still going to be making money from cyber warfare. They're still going to be making money from the government, and that's going to be completely okay. Also, this is why I focus on companies that have pricing power. Why do you guys think I cover NVIDIA all the time? NVIDIA doesn't care about inflation, because they're selling to the biggest companies in the world, and those companies don't care about inflation. So when we look at AI chip demand, NVIDIA is going to crush. Palantir is going to crush. Tesla also, with higher inflation, very high inflation, this also means companies have higher cost of goods, okay? All the competition is literally going to need diapers for Tesla because Tesla continues to lower their cost through economies of scale, okay? As well as economies of scale, they're reducing their cost per vehicle. So the competition is going to be really fierce. And Tesla, just like SoFi, just like, a lot of other companies, has the same business model. Get customers in the door as cheap as possible and upsell later on, okay? Tesla is going to dominate, Palantir is going to dominate, NVIDIA is going to do great as well. So there's a lot of opportunity in this market. Am I buying hand over fist? Guys, I'm not just buying hand over fist, I'm buying bicep over tricep, okay? Bicep over tricep. I just want to show you my confidence because I'm mind boggled. I've been making videos for such a long time. One video where I say be a little bit more cautious, people think I'm jumping ship. Now, I want to talk about Apple because Apple said something that really, it was very surprising, but a very good thing about the US economy. And I'm super bullish because Apple, they have unveiled a significant investment initiative committing $500 billion over the next 4 years to expand their manufacturing footprint in the United States. This plan includes the creation of 20,000 new jobs and the establishment of a major factory in Texas dedicated to producing artificial intelligence servers. I want to go through my portfolio because Apple is something that's not sexy. I know you're going to click off the video and it's not interesting to most people. However, I want to go into my Apple position and completely change your mindset around value stocks and having a mixture of not just growth stocks, but actually having value. I have 1.4 mil in Apple. I'm up $333,000. And over the past 1 month, Apple has had a 9.5% return. This is my top holding at 36% of my portfolio. And this is how my Discord community has been the #1 Discord community in the past, so long of a time actually. But this month especially because we have Apple. And Apple, I want to show you a play. It's called the call credit spread. And I want to quickly educate you on what a call credit spread is and how you can use it to make money. This is going to be really interesting because I am bullish on Apple. However, Apple itself has gone up a lot. So I'm looking to hedge and create income. I'm going to click trade options, and I'm going to go to Apple April 17th, okay? And I was, taking a look at the technical analysis, but I'm trying to make this video as short as possible. I know nobody likes long videos. So let me go and do the 270. This is easy money. This is as easy money as it gets, okay? Hold a lot of Apple or whatever stock, right? I hold a lot of Apple. In my community, we always talk about Apple during my live Monday and Wednesday calls. And not only are we long a stock, we generate income by doing call credit spreads, which is, you can also do the strategy without holding the stock, but I recommend holding the stock as well. So look, sell call, I'm gonna sell the 270. I'm gonna just expand this option right here. You'll see it's a 15 delta, super low, super low. So I'm gonna sell the 270. Okay, I'm gonna go click buy the 275. And you can see here, it's a total credit of $52. My max loss is 448. Now, it's unlikely Apple will go to 275. You would lose money here if Apple went to 275 in the short term. Unlikely, but it's possible. So again, pay attention to risk management. Don't open up more than 2 to 3% of your money money in any single call credit spread position. But here, no brainer play. $52. This is like a bit over 10% return. 10% return in 60 days. If the market's down, 10% return in 60 days. If the market's sideways, 10% return in 60 days. The market's up 3%. I'm gonna make 10% in 60 days. This is how I'm beating every single other investor with less risk. Keyword, less risk. I'm not doing nothing crazy. I'm the safest investor who believes in passive income, consistent income, safe income, and I still get really high returns. So I just want to reaffirm that I'm a bull, I'm a perma bull. I have many amazing plays that I plan to do to make money in this market environment. I hope this video was super helpful for you, and I hope that I reaffirmed my views on the market and reaffirmed all the videos that I've been making. I still 100% believe in SoFi, Tesla, and Apple, and Walmart, and all the other stocks that I've been covering. 100% belief. If you made it this far, thanks so much for your patience. Thanks so much for listening. And I bet if you made it this far in the video, you have better results than everyone else because you're not short-term sighted. You take advantage of opportunities. You dollar cost average, and you have a long-term mindset because you have the attention span to make it this far in the video. So thank you so much. I know that you're going to be successful. If you need anything, I know, comment, email me. I'll drop my email down in the description, and let's just make some money. That's my goal here, okay? I'm not here to create controversy or drama or anything. I just want you to get results because this option trading stuff has clearly been super useful. Let me go back to my portfolio. Let me just reaffirm here. $202,000 in the past month, $369,000 year to date. Year to date. It's less than 2 months into the year. I'm up almost 10% in realized gains. This stuff will work for you if you learn from the right person and you invest your time into actually learning this the proper way. And I'll drop a video here on option trading for beginners. I made a 4-hour free course. You've probably seen it already. It's very popular, has over 1 million views because I put in a month into making it. I think it'll change your life. If you want to learn the foundation of option trading, which I highly recommend, then go ahead and watch it. It's free. You have nothing to lose but knowledge to gain.